webcast is now starting. All attendees are in listen-only mode.
Hey, good afternoon, everyone. This is Joe Bacella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of using options during earnings season for supercharged options trades. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. As a reminder, this webinar is being recorded, and we will be sending a copy of this to everyone who has registered for today's presentation. Throughout the presentation, please submit your questions using the GoToWebinar chat window. Myself, as well as Michelle Greenblatt, will be available to answer your questions throughout the presentation. Now, before we begin the webinar, we would like to introduce our guest, Price Headley, to the webinar. Price was introduced into the Traders Hall of Fame in 2007 and is the founder of BigTrends.com. Big Trends provides investors with specific real-time stock and option strategies and investment education in order to profit from significant market trends. Now to get us started, here's Price Headley.
Well, thanks, Joe, and thank you, everybody. Good to be with you. Price Headley here, actually. What we're excited about is we have a lot of our Big Trends community in as well today to learn from Marc Chaikin, and I'm always excited to learn from an industry expert like Marc Chaikin. You know, it's interesting. I got into trading 25 years ago, 26 actually, after graduating from Duke University and started trading and just fell in love with it back in 1990. Bottom line is that when I was getting started, Marc Chaikin was already an industry name. And after 40 years on Wall Street as a trader, stockbroker, analyst, and options trader, Marc founded Chaikin Analytics so he could deliver his proven stock analytics to investors and traders like yourselves based on his Chaikin Power Gauge, which is actually a 20-factor alpha model. And what I like, by the way, is that Marc focuses not just on technicals or not just on fundamentals. He integrates all these things together to help you identify a stock's potential. You know, Marc Chaikin's a pioneer really in so many different things, including a first real-time analytics workstation for portfolio managers and stock traders, which is now a part of the Thomson Reuters institutional workstation. He also developed computerized stock selection models and technical indicators, including his very well-known Chaikin Money Flow, which are now industry standards. So I'm definitely excited that Marc also uses his analysis to tie that together into options trading, which is a passion of mine in my Big Trends community. So I know you're going to want to stay with Marc throughout his whole presentation because he just told me right before we started that he had a very special offer, including some really exciting options training to help you really take your options knowledge and your options trading to the next level. So you're going to want to make sure you stay with Marc through the entire presentation for that special offer. So without further ado, Marc, I can't wait to hear what you have to share with all of us. So please take it away. I'm glad to be here with you.
Price, thank you for the kind introduction. I think I can fire our PR firm. Today's webinar is all about a methodology that we've developed to help you find winning stocks on both the long and the short side and how to convert those stocks into winning options trades, particularly during earnings season. So we've got a lot to go through, but I want to start by sort of giving you a little bit of my background. Price touched on it. 50 years on Wall Street, lived through 10 bear markets. That doesn't look like it's going to be relevant just at the current moment, and we'll go through a little bit of market analysis to begin the webinar since so many people are interested in where the market's going. For 45 years I've been using technical analysis. It's really my passion, but I always knew that technical analysis worked because it was basically monitoring the tracks of the big institutional investors who use fundamental analysis to make their decisions. Along the way, I've been mentored by some of the smartest and most successful institutional investors, and the reason that's relevant is because everything I've learned from them, both clients of mine and colleagues, is embedded in the Chaikin Power Gauge rating. It's really the culmination of my life's work, and I founded Chaikin Analytics to share that with individual traders and investors like yourself. The fortune that we've had to be featured on so many media outlets is something that a lot of stock market analysts share, so we're not unique in that regard. But what I'm most proud of is that Barron's, about 3 months ago in their electronic investor column, cited us as one of the top 2 quantitative sites on Wall Street, and that really means a lot to me. So in today's webinar, we're going to look at 5 keys to supercharging your options trades, finding bulls and bears with the Chaikin Power Gauge and Chaikin Relative Strength, how to use Chaikin Money Flow to predict future price movement, how to dramatically improve your timing with buy and sell signals, how to play good defense to avoid those landmines that can explode and destroy your portfolio profits from trading the course of a year, and then how to use our earnings alerts and our options ideas capability to supercharge your profits. Now, did Brexit and all the volatility that surrounded it have you spooked? If it did, type a big Y in the question box, please. And what I'm seeing, all these Ys, confirms what we've been hearing from our clients and from people on webinars like this. The headlines really hurt. They distract us from what we're trying to accomplish. They can destroy a game plan by making you nervous. And so I thought I'd start out by looking at the market and how Chaikin Analytics can help you know where the market's heading, because Brexit was really an opportunity, as you'll see in a moment, and volatility is your friend, not your enemy, if you know where the market's going and if you have a disciplined methodology to find winning stocks. So we have 3 proprietary indicators that help you know where the market's headed, and we like to look at the SPDR, the SPY, which is the most actively traded instrument in the U.S. markets. This is the Standard & Poor's 500 ETF. Both individuals and institutions use this to trade, but also to make big bets on the market when they feel that they want to move quickly and can't get into individual stocks. So we have 3 ways to look at the SPDR, and we're going to go through that in a moment. One is the Chaikin Money Flow, and as Price alluded to, that's been in the marketplace since 1981. So by 1990, institutional investors were using Chaikin Money Flow on individual stocks to help spot what the institutions were doing. We then have something we call the power bar. For every list, index, industry group, ETF in Chaikin Analytics, we show you the number of stocks with bullish or bearish Chaikin Power Gauge ratings. And as Price reflected, this is a fundamentally based quantitative model. And then finally, something new that we've been using since the first of the year, we look at the relative strength of an ETF called the RSP. This is the Guggenheim Equal Weighted S&P. And we compare that to the SPDR. Now, as most of you know, the S&P 500 index is capitalization weighted. We all lived through the FANG stocks last year, probably tired of hearing that. Facebook, Amazon, Netflix, Google drove most of the price action in the S&P 500 in 2015. But if you look at how the RSP, the Guggenheim Equal Weighted S&P, which by the way has about $8 billion in assets in it, so it's a force as well, is doing compared to the SPY, you get a good read on market breadth. So you don't have to go to 100 different websites and compute advanced decline and up-down volume ratios. It turns out that the relative strength of the RSP to the SPY does that for you. So let's take a look at a 1-year chart of the S&P ETF, the SPDR. And I'm going to go through a little bit of analysis and then give you a conclusion that we've basically been espousing in our weekly market letter. Back in January and February, we made a W bottom in the market. We had made one back in September, August, September, but the January-February bottom was different. Market started down on December 15th when the Fed started raising interest rates for the first time in 8 years. We made a sharp bottom and then we rallied up just like we did in September. But on that rally, Chaikin Money Flow went positive, whereas in September it stayed negative, which led us to believe that the market would definitely have a retest. So we weren't sure that we'd get a retest, but declines of 10% or more over the last 10 to 15 years have ended in W-shaped bottoms. Declines of less than 10%, 5 to 9%, have tended to be V-shaped bottoms. So every low between October of 2011 and May of 2015 was in the form of the letter V. That's why every analyst on CNBC who said buy the dips was right, and it was a pretty good time to be making money just by buying dips. Markets become a lot more volatile, but that W bottom is really important. The reason is that Chaikin Money Flow stayed universally green all the way through that rally as we broke up through short-term resistance, banged up against resistance in the 2100, 2130 area, and it's only that little Brexit two-day panic that turned Chaikin Money Flow slightly negative. So very strong Chaikin Money Flow, and as we broke out above 2130, money flow has stayed strong. Now we've run into resistance here. I've got a funky mouse. Run into resistance here. The market has basically corrected in a sideways fashion, and if you look at our overbought oversold indicator, which is a cross between an MACD and a stochastic, you'll notice that by going sideways with one down day here on Monday, actually Tuesday, we got oversold in that indicator, and Chaikin Money Flow stayed green or positive. That's a very, very powerful buy signal, short-term buy signal. If you look right under there, you see that the RSP, the equal-weighted S&P, has been outperforming the spider since mid-April. Now, what that means is the average stock, what they used to call the foot soldiers, has been performing better than the generals. So when I started out Wall Street, you had General Motors, General Electric, General Telephone. These were the big cap stocks, General Motors. And we used to say if the foot soldiers are following the generals, the market was healthy. If they weren't, which was the case starting in April of 2015, the market's going to have trouble making upside progress. So go back up to the top now and look at the power bar. The power bar for the S&P, even after this 2.5-week sideways correction, still shows many more stocks with bullish versus bearish power gauge ratings. So conclusion is and has been for us since Brexit, we're in a bull market. Don't believe the people who tell you that they're going to sell everything and the market's vulnerable to a 20% correction. Is it possible? Certainly, but there's no evidence from the technicals that we look at, the proprietary technicals in Chaikin Analytics, and this is still an unloved bull market. Individuals are skeptical, institutions are skeptical, they talk about high valuations. Bottom line is, if you're anxious about the market, we've got 3 indicators that can help tell you where the market's headed. Now, I know a lot of people are interested in smaller cap and mid cap names, and you should be because they've been leading the market higher. So look at the power bar on the Russell 2000 small cap index. It's a 3-to-1 ratio of bullish to bearish stocks. In the S&P, it was less than 2-to-1. And starting in mid-May, if you look down at the relative strength, small cap stocks started outperforming large cap stocks. So there's opportunity in small cap stocks. Power gauge rating, as you'll see in a second, is absolutely wonderful at finding small and mid cap stocks that may not be heavily followed by analysts. So I like to quote Warren Buffett here. Investors should be fearful when others are greedy, and greedy only when others are fearful. Many of you have heard that before. I'm going to show you how you can actually use that in Chaikin Analytics. And here's one example of that. F5 Networks was in a pretty steep downtrend from September through February. We have a proprietary relative strength indicator that goes from red to green and back again. And the stock was in a downtrend. But it's a very interesting company. And as the power gauge rating, and you'll find out what that's all about in a few minutes, turned bullish in mid-April, and you can see that at the bottom of the chart. There's a ribbon on this one-year chart that shows you day by day, week by week, what the power gauge has been saying. When it's green, it's bullish. When it's red, it's bearish. And right at the relative strength turned positive by going from red to green in mid-April. Now, we always get the question, what's the time frame on that? Is it like William O'Neill's? And the answer is yes. We look back over 26 weeks, but we smooth it out. It's like a stochastic of relative strength. So you don't have to memorize numbers from 1 to 99. It's red and green, and it complements the power gauge. So if you go back up to the money flow and then look at that price action in the yellow circle, you'll see that FFIV was making some really good progress in late May, and then it spiked up dramatically to the 125 level. Well, why did it do that? It did that because of takeover rumors. So here's Warren Buffett in real life. Brexit caused a two-day drop in FFIV from 120 all the way down to 107. Following Warren Buffett's dictates, you could have taken advantage of the fear in the marketplace, knowing that the stock had a bullish power gauge rating, gave a buy signal. We call this our oversold buy. Price gave me some credit for inspiring his trading. I'll give credit to Larry Williams, whose volume accumulation is the sort of inspiration for Chaikin Money Flow. But more recently, Larry Williams has come up with a very simple pattern. It's based on the fact that you'll know something about a stock and like it, and it gets oversold and makes an 8-day low. And his view is that an 8-day low on a stock that you have conviction on is a buying opportunity. Now, we filter that with the power gauge rating, so there's where your conviction level goes way up. If the 20-factor model is bullish and the stock makes a new 8-day low, particularly in the middle of a panic like this 2-day Brexit, there's your opportunity to take advantage of fear. And sure enough, the stock has eased its way back up to the 125 level, a really nice entry point. Now, the second example here is a small cap stock called Quad Graphics. So this is where the IWM comes in. Small cap stock outperforming. Power gauge rating has been bullish since early January. You can see that on the screen. But more importantly, the stock started outperforming the market in February with very positive Chaikin Money Flow all the way across the board. As you'll see in a moment, we have a name for that. We call it the ideal setup. You had two buy signals, those oversold buys back in March and April, and then on the Brexit panic, you didn't even break the 21-day average because this stock is under such accumulation. And then sure enough, 2 days ago, the stock spiked from 25 all the way to 28.5. If you take advantage of fear and buy into weakness, you're going to make money, but it's hard to buy weakness unless you have conviction. The rest of this webinar is about a methodology that will give you the conviction to step in when other people are panicking and take advantage of that. So one of the things we've learned in the last 6 years at Chaikin Analytics is most people don't have enough time to do all the work that's needed to find winning stocks. That's why they subscribe to services like Price Heedly. That's why they need tools that solve the biggest problem we have in our lives, which is information overload. In our daily lives, we've got Twitter and Facebook, LinkedIn, Snapchat, Instagram, email, Facebook. You know all the distractions that can be created if you're into any of these social media outlets. As an investor or a trader, you've got 1,900 ETFs, you've got over 3,000 stocks with options, you've got 5,000 liquid U.S. equities to choose from. So the big question right at the center of this chart is, how do you focus in the age of distraction? Because focus is really critical to making money if you're an options trader or a stock trader, swing trader. Our solution to the information overload problem is Chaikin Analytics for both iPad and desktop. Centerpiece is our power gauge rating. That's the edge, and you'll see what that means in a moment. Now, back in October, we integrated a module from a company called Options Play because, in my view, they built the best options idea generator, the one I would have built based on 5 years of running an options department back in the early 80s, if we had had the time. But I felt it was so powerful, and I wanted our Chaikin Analytics subscribers to get the benefit of it so quickly that we licensed it from Options Play. Gives you the ability to auto-generate strategies based on risk, reward, and probability, toggle through 5 panels, and quickly find the strategy that's right for you. And it's linked to the power gauge rating. So how does the power gauge rating help you? And that's basically the reason that Chaikin Analytics can lead to larger options profits. It gives you a directional edge. Now, how many of you realize how important a directional edge is in options trading? If you do, type a big D into the question box, please. And I can see that if you've traded options, as most of you have, that you understand how important a directional edge is. Timing is obviously important as well. In running an options department for 5 years, brokerage firm with about 25 branches, hundreds of brokers, thousands of options clients, I watched 80 to 90% of them lose money. And the reason was they didn't understand how important a directional edge was. They were making big bets with short-term duration. They weren't focusing on what I think is critical, which is which stocks are most likely to go up strongly and which stocks are more likely to go down. So the Chaikin Power Gauge Rating and Chaikin Analytics gives you that directional edge with a quantitative model that combines fundamentals and technicals, and then we overlay Chaikin buy and sell signals for better entries and exits. Now, if you're a blues fan, you probably know Dr. John from New Orleans, one of my favorites. Actually got to hear him play live at a place called Tippy Tina's. And his biggest hit was, "I've been in the right place, but it must have been the wrong time." And how many of us as options traders have experienced that? We're in the right stock, but our timing is off. And timing is everything in options because premium erosion is your enemy if you're long options. So let's take a look and focus on a methodology that really works. It's worked for 6 years for Chaikin Analytics subscribers, people who follow our market letter, and it can work for you. It's based on the fact that volatile markets demand a disciplined methodology. So we've created this pyramid. My wife, Sandy, who is new to stock trading, 3.5 years in, never traded in her life, has been knocking the cover off the ball by following this methodology. She calls it her 5-step methodology. At the top of the pyramid, the Chaikin Power Gauge Rating. That's your directional edge. High probability, proven quantitative model tells you which stocks are likely to outperform or underperform the market. We also think industry group rankings are very important, and we do them in a unique way. We're not going to have time to cover that in this webinar, but we'll do that in a future webinar. We rank industry groups based on the number of stocks with bullish versus bearish power gauge ratings, then look for relative strength confirmation. Now at the bottom of the pyramid, 2 technical indicators. Chaikin Money Flow and Chaikin Relative Strength. Now, Chaikin Money Flow is on every online brokerage platform, whether you use Thinkorswim or Options House, Fidelity. Chaikin Money Flow is there. It's also on stockcharts.com. Chaikin Relative Strength is unique to Chaikin Analytics, and it's how we combine them on the chart that really makes it so easy for you to cut through the clutter and zero in on opportunities. saving time and solving that information overload problem. In the middle of the pyramid, the buy and sell signals that we think are so important for options traders. Now, the Chaikin Power Gauge rating looks deceptively simple, but it's a proven and a reliable predictor of where stocks are going. So please don't confuse simple with simplistic. I like to say on these webinars that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And it can be your GPS during earnings season. Now, the reason I say that it's a Chevrolet with a Ferrari engine under the hood is that it's based on my 40 years experience working with institutional investors. Getting to know what they looked at to make their decisions so that I could help them incorporate technical analysis, which is where I got my start with Chaikin Money Flow and our volatility bands. I had to learn what they looked at, how they made decisions. Were they value investors? Were they momentum investors? Were they earnings driven, and so forth? This model, 20 factors distilled from 200, frozen in September of 2010, never changed, the weights haven't changed, fully transparent, is the reason that Chaikin Analytics can give you a directional edge. 4 components, 20 factors. Financial metrics are 35% of the model, just to give you a little tip-off on some of our proprietary weightings. This is what a Warren Buffett would look at. Price to sales and free cash flow are proven predictors of stock movement. Earnings is very important. It's what a Jim Cramer focuses on, particularly earnings surprise. Now, 85% of the model is fundamental, only 15% is technical, but the technicals keep the model honest, and they're all proprietary Chaikin technical indicators. Now, why are earnings surprises so important? And that's particularly relevant because the gist of this webinar is how you use options during earnings to supercharge your profits. Well, earnings surprises, which happen when stocks outperform or underperform analysts' estimates, they beat or they miss, create a lot of volatility. And they lead analysts to raise or lower their estimates. And it's been proven by academic studies that analyst estimate revisions, and this is something I learned from one of my mentors, George Douglas, who headed up the quantitative department at Drexel Burnham in the 80s and is actually still running quantitative money today. George did the seminal research on earnings surprise and earnings estimate revisions. And what he noted was that earnings surprises come in bunches, and we'll see examples of that. There's never just one of them. Someone once said that earnings surprises are like cockroaches. There's never just one of them. And they lead analysts to raise or lower their estimates and change their ratings. And so these are the more sensitive factors in the model. Financial metrics don't change very much, so that's the bedrock. These are the more sensitive factors like short interest and insider activity that can change on a dime. So we do like insiders to be buying their own stock. They've got a window into the company's potential, so who better to follow? That's why it's one of the 20 factors. Now, how is the power gauge rating done? Well, I took the liberty in this chart of combining the back-tested results through January of 2011 with the real-time results, because the shape of the curve is exactly the same. Now, nobody will ever show you back-tested results that don't look good, so having the real-time results in here is really critical. We use the Russell 3000 as our universe. Very bullish stocks, always the same number, 428 at any given point in time, have averaged a 20% annualized gain since 1999 through the end of 2015. The very bearish stocks, even after a 7-year bull market, 428 of them at any point in time, down 1%. Now, in 2015, the results are even more dramatic. This is all real-time actual results. The very bearish stocks in the Chaikin Power Gauge rating in 2015 were down an average of 17%. These were the fracking stocks, the rails, the overpriced social media stocks, energy stocks in general, small caps, which took a beating in 2015. The average very bullish stock down 1%. Now you may say, how's that possible if the S&P was basically flat on the year? Well, that's the cap weighting of the FANG stocks coming into play. But it's this ability to capture and know the difference between a stock that's likely to outperform the market or underperform the market that's at the heart of Chaikin Analytics' success. Now, two other proof points before we get to some very specific examples. We've partnered with NASDAQ and with First Trust Portfolios, who create ETFs and unit investment trusts. With NASDAQ, we've created 3 co-branded NASDAQ Chaikin indexes. They were rolled out in 2014. They're rebalanced once a year, so they're really buy and hold portfolios. And all 3 have outperformed their benchmarks in the 28 months since they've been in the marketplace. And we're hoping that ETF creators will license 1 or more of them to create ETFs. But First Trust has actually rolled out unit investment trusts with over $50 million in it. Starting in December of 2015, there are now 3 series and a 4th one to come. They're sold through registered investment advisors, not publicly traded. Each of the 3 20-stock equally weighted portfolios using the Chaikin methodology has outperformed the S&P, which is the universe that they were based on, since inception. So real-life proof that the power gauge works and real serious money being invested based on the Chaikin methodology. Now, John Walden, who many of you may know, is an uber commentator on the market. Some of his pieces go over my head. But last Sunday, in his Thoughts from the Front Line, John Walden gave us a huge shout out. I'm impressed by what Marc has done. My analysts are enthusiastic users of Chaikin Analytics. They use it to analyze trades and recommendations of our writing team. Marc's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. So let's look at the methodology that John Walden's analysts are using before they make stock recommendations. We have a pattern we call classic Chaikin bulls. Power gauge rating is bullish, meaning the fundamental potential is positive. Stock is outperforming the market, and Chaikin Money Flow is green, not red, telling you that the institutions are accumulating the stock. So here's a 1-year chart of United Health Group, largest healthcare stock in America. It's also a stock that's in each of the 3 First Trust unit investment trusts, which are called Chaikin Low Beta Growth Unit Investment Trusts. The reason that's important is that a computer program, a discipline methodology that we built to find these stocks for the portfolios, found United Health. And you could have found it as well. Why? Because medical care stocks were strong back in February. Power gauge turned bullish. Stock had already been outperforming the market, and again, we know that because our relative strength indicator is green. And look at the Chaikin Money Flow. So with the market agreeing with the model, which is so critical, and these oversold buy signals cropping up, you've got what we call a classic bull, and as I said, we have a name for that, and we call it the ideal setup. Now, classic Chaikin bear is the exact opposite. We're using Tiffany as our poster child. 2.5 years ago, it was Wynn Resorts, as the stock was dropping from 200 all the way down to 60 with a bearish Chaikin power gauge rating. In the last year, we've been using Kinder Morgan. And now Tiffany's is a perfect example of a classic Chaikin bear. You want to avoid these stocks. If you're investing in your 401k plan, get them out of there. Get the red out. If you're trading options, these are your potential put candidates. If you're doing vertical spreads, which we like, put verticals on stocks like this at the right time are terrific option strategies. So bearish power gauge rating, underperforming the market with weak money flow. That's a classic bear. Here's a blow up of that. And now you've got overbought sell signals back in October and November. January, February. The February one didn't work because the market took off, but the signals more recently have. These signals are great for options traders. They have a typical time duration of 5 to 10 days, and they work about 2 out of 3 times. Now we have one signal we call a relative strength buy signal that has a longer time horizon, 4 to 8 weeks. Same accuracy, about 2 out of 3, but you can establish an options position with a longer time window, knowing that the stock is likely to recycle a couple of times on the up or the downside. Now, how do you find these stocks? Again, time is so pivotal, and it's in short supply. Well, we have a number of ways within Chaikin Analytics to find them. We're going to show you our screener toward the end of the presentation, but we have Chaikin hot lists. And one of the hot lists are all bullish stocks or stocks that turn bullish this week. So on the screen, you see a snapshot goes back a ways. There's Tiffany on it, Potash, which has been a terrible stock, Kinder Morgan, all with bearish power gauge ratings. Twitter, Tesla, those haven't changed. Some of these stocks have turned bullish or neutral. So you can find them very easily with Chaikin hot lists. Now, one more quote from Warren Buffett. I call it the ideal setup. Warren Buffett has said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. I call that the ideal setup. Now, Warren Buffett's hero in life is Ted Williams. How many of you are old enough to remember Ted Williams, arguably the best hitter ever in baseball with the Boston Red Sox, unless you're from Cincinnati and you think Pete Rose is? Well, why is he Warren Buffett's hero? Because Ted Williams waited for the perfect pitch, the ideal setup. And he didn't swing at anything that he didn't think was in his sweet spot. That's why he's the last baseball player to bat 400. So we're going to show you some ideal setups and how they are perfect for options traders. Now, one of the ways you find the ideal setup, you've already seen hinted at, we call it the dynamic duo. It's the combination of the Chaikin power gauge rating and Chaikin relative strength. The dynamic duo helps you find big winners and losers. It gives you that directional edge and obviously leads to very profitable options trades. Now, I want to make one exception here. Relative strength stands alone as a bullish or bearish indicator. So there are many momentum stocks like Amazon and Tesla and Netflix, stocks on the downside, where the power gauge rating is just not in sync with the market action. Usually it's because the stock is very richly valued. You're paying too much for $1 of revenue, or the company doesn't have any earnings in the case of a lot of the cloud computing and social media stocks. So if you're a momentum trader and the relative strength and money flow are strong, that's okay. But just be aware that when something changes, and inevitably it does, you're on a high wire without a safety net. So you've got to use stops, and you've got to be mindful of the fact that the fundamentals are not supporting your positions. But it's very clear from academic studies that superior returns come from stocks that outperform the market. So here's an example of the dynamic duo. This is an aerospace stock called Huntington Ingalls. Power gauge rating at the bottom of the chart turned bullish in late October. About a week and a half later, the stock started outperforming the market. It broke out of this base, and money flow was very strong. And it did it on an earnings report. We have new earnings functionality in Chaikin. We let you know when stocks are due to report, so we knew that Huntington Ingalls was due to report today before the opening. How do you know that? Because there's this burst on the chart instead of a moon. So all this information is at your fingertips, and then you can also look on the chart and see whether the last 4 earnings reports were positive or negative surprises. In the case of Huntington Ingalls, the last report was a positive earnings surprise. But the key here is that the dynamic duo was strong. The market was agreeing with the model. And that's really critical, because no matter how good a quantitative model is, no matter how good your fundamental research is, If the market doesn't agree with you, the market always wins. My old friend Marty Zweig used to say, the way to make money is to do two things. Watch the Fed and listen to the market. Mr. Market always wins. So if you want to put the odds in your favor, look for stocks with fundamentally bullish potential if you're trading on the long side that are outperforming the market. If Chaikin Money Flow is strong, that's another confirmation. That's our ideal setup. And then these oversold buy signals, particularly ahead of earnings, are wonderful entry points, and you very often get lucky and see a positive earnings surprise and a spike up. Great spot to take your profits. You had that today. The stock spiked up to the upper volatility band. Money flow is actually negative. Great spot to take your profits. The stock ended up sort of flat on the day. Now, let's look at a negative earnings surprise stock where the dynamic duo was weak. This is SunEdison. Sadly, firms like Merrill Lynch had buy signals on this in the high 20s. Power gauge rating wasn't fooled by that. Neither were the institutions. They were selling the stock as it was making its highs up in the 32 area. The power gauge rating turned bearish in mid-July with the stock at about 28, started underperforming the market. And look at the Chaikin Money Flow leading up to the bankruptcy filing, which we highlight on the screen. The reason I do this is we were hammering home the point that this was a stock you needed to sell or go short. Negative earnings surprises, highly leveraged, lots of debt. But yet firms like Merrill Lynch had buy recommendations on it. They put out a sell at $3 down from 28. And ultimately the company filed for bankruptcy. We got this testimonial from someone I met at an Options Industry Council conference in California back in May. He came up to our booth. It turns out he was a Merrill Lynch broker from Philadelphia. And he said, I bought SunEdison on the way down at 15 for my clients because Merrill Lynch was still recommending it. If I'd been using Chaikin, I would have saved a lot of pain and money for myself and my clients. Now, the second way to find the ideal setup, and it's really the key to making profits, is being able to spot personality changes. As an options trader, as a stock trader, you need to be on the right side of stocks. And very often we do something that is fatal if you're a trader. We put our feet in cement. We fall in love with a stock like Tesla or SunEdison, or we fail to see a turnaround, as we're going to see in a moment, in the biotech stocks based on relative strength. So we have a very simple way to help you spot personality changes. And I'm using Starbucks as an example of a bearish personality change. The stock had been outperforming the market until late February, and then where you see this yellow zigzag, our relative strength indicator went from green and yellow to red, and that told you that now, with a bearish power gauge rating and negative relative strength, even though the money flow is positive, this was a stock that was likely to underperform the market. The dynamic duo was negative and you'd had a bearish personality change. And basically Starbucks has gone nowhere since February. Sideways in a market that's making new highs. And even after what looked like a positive earnings report, the stock has been trending down now for about 7 days. Now, industry groups and sectors can also have a personality change. So if you trade ETFs, I know a lot of you do, you may trade the Select Spider Sector ETFs, you may trade industry ETFs. If you were following our ETF lists, you would have seen that the XBI, the Spider S&P Biotech ETF, had a bullish personality change in early July. And now everybody's telling you that biotech's in a bull market. It's rallied 20% from its low, but the personality change took place with the ETF at about 50 on its way to 65. And we rank all the stocks in that ETF by the power gauge rating. So if you had been following the 20 spider groups or the 9 select spider sector ETFs, you would have seen healthcare and biotech improving. And then you look and see which stocks have bullish ratings, because those are the winners. And biotech, Amgen, Celgene, the big biotech stocks would have stood out in early July. So let's look at Biogen, which already had a bullish power gauge rating and also had a personality change. So you could have been looking to buy options on Biogen ahead of that earnings report, knowing that each of the last 3 earnings reports were positive earnings surprises. You would have known the date at the top of the chart, and if you had bought in, you would have gotten lucky because the stock spiked up on its earnings surprise, positive earnings surprise, then went sideways, and then you got the benefit of something that nobody could have anticipated, potential takeover interest by Merck and Allergan. So you got a double dose of upside here. You got the juice from the earnings surprise, and then you got a big 20% plus move based on takeover rumors. This is what a disciplined methodology can do for you. Now, third technique, part of our 5-step checklist, is using Chaikin Money Flow to spot what we call stealth buying and selling. Institutions are so big, people like BlackRock and Fidelity and T. Rowe Price and Invesco, that their orders can't be executed on one day, and they're paranoid about people knowing what they're trading, and so they like to fly under the radar screen. We have a pattern we call stealth buying and selling. I owe this sort of label to my colleague John Schlitz, who publishes our morning insights that come out before the opening. So here's an example of a small cap stock, Central Garden, where there's been stealth accumulation. Power gauge has been bullish. You had a bullish personality change, so everything was in sync. But notice from February, really from late January on, institutions have been accumulating the stock. Now, how do we know that? Because Chaikin Money Flow looks back over 21 days, looks at the daily trading pattern, high, low, and close versus the range, relates it to the volume. It's been out there since 1982, 35 years, helping institutional and individual investors spot stocks like this. So why do we call this stealth accumulation? Because as the stock was going through its periodic cycles of overbought and oversold, money flow stayed positive. Institutions, particularly here in this May-June period, were using weakness in the stock to accumulate it. And then you got these momentum breakouts. And momentum breakouts are really interesting because you have to know how to handle them. Most of the time when you get a momentum breakout, which we define as going above this upper volatility band, these are modified Keltner channels. Usually after you get a momentum breakout, you'll go sideways for 5 to 8 days. One service for $10,000 sells you a methodology for dealing with momentum breakouts. I'll give it to you in 5 sentences and it's free. You get a momentum breakout, wait for sideways to down movement for anywhere from 3 to 8 days, and feel free to enter the stock on the long side in this case. So Central Garden has continued to make new highs. This is a stock my wife Sandy found in looking for small cap stocks because she understands that the IWM was performing well, and you got periodic spikes. SunTrust recommended it back here in May. Nobody actually knew why. Actually, it was here in June. Why it spiked up to a new high? Well, it's an underfollowed stock. There's no earnings data. There are no analysts following it. So when SunTrust changed their rating from neutral to bullish, stock popped 15%. Sandy took that spike to the upper band as an opportunity to take profits. And you can do that too. Now you've had a big spike yet again after recycling through various overbought, oversold, but money flow has stayed bullish the whole time. So here's an example of stealth accumulation. Now McDonald's is an example of stealth distribution and a pattern we've been teaching institutional investors for over 35 years. If a stock makes a new high, Chaikin Money Flow should also make a new high. So back here in late January, early February, McDonald's made a new high. Again, this is a momentum stock where the power gauge was not supporting the move. So be careful. But money flow was positive at the upper band, so no warning sign flashed. Fast forward to May when the stock made a new all-time high at 130, and look what Chaikin Money Flow was telling you. It was red, not green. There was your signal, and very rare in Wall Street that you can get out at the high or buy in at the low, but this is one indicator that can help you do that. At a minimum, you want to have a very tight stop, but if you're smart, you just say thank you very much, take the money off the table. Now when the power gauge turns bearish a couple of weeks later and it starts underperforming, you're looking for selling opportunities. You're looking to buy puts. But it's a classic example of stealth distribution, institutions selling under the cover of strength as individuals are jumping in to buy it. And when McDonald's reported disappointing earnings back here in July, the stock spiked down and it's been pretty much down ever since. Now, if you wanted to buy a fast food stock, we had recommended Jack in the Box as our stock of the week back in May. Same time McDonald's was giving that sell signal, Jack in the Box, which is both hamburgers and Mexican food, so benefiting a little bit from Chipotle's woes. They have the Qdoba chain. Power gauge turned bullish in early May. It started outperforming the market. Money flow was strong. And then you got that oversold buy signal. There's your ideal setup. Great spot to buy call options. Stock reported earnings, spiked up to new high, up 10% today. Very powerful predictor. Power gauge is now neutral, but if you had bought in there, you'd stay with the stock because the relative strength and money flow are still strong. Might have taken some money off the table at the upper band, but you're still thinking positive earnings surprise. Now, we've alluded to Chaikin buy and sell signals. There are 6 pairs of them in the system. 4 of them require that the power gauge rating be in the same direction. The relative strength signals key off relative strength alone, doesn't care about the power gauge rating. Very often the power gauge will be on the same side of that trade. So why are signals important? Well, we alluded to it in the beginning of the presentation. If you're an options trader, timing is very important. So to trade more profitably, follow the signals. Any approach that's based on a discipline with proven analytics that give you conviction is better than trading on your emotions. So here's an example. Varian Medical also happens to be in one of the First Trust unit investment trusts. So the computer found this as well. The Brexit panic sell-off here in June gave you an oversold buy signal. Now, pretty tough to buy into a stock that's just dropped from 86 to 77 unless you have conviction. And this whole webinar is about trying to impress upon you the fact that there are methodologies out there. We don't have a monopoly on that, but this is a really good methodology that can give you the conviction to step in when people are fearful and follow Warren Buffett. And if you bought on that oversold buy signal, you were rewarded mightily when the stock reported a positive earnings surprise just 5 days ago. Stock spiked up from 88 to 95. Now, one of our in-house high-level technology experts didn't know he traded stocks, said, Mark, I can give you a new testimonial. I said, why is that? He said, well, I bought Varian Medical on that oversold buy signal, and the stock's up over 10% today. So these are everyday people doing everyday jobs, just like you, following a methodology and doing what they've never been able to do. enter trades at the right time with conviction. Now on the downside, here's Macy's in the retail sector. Amazon's eating everybody's lunch in the bricks and mortar retail sector. Plenty of sell signals. We call this our money flow sell. Money flow is weak, power gauge is bearish, stock drops down through a short-term moving average. Think 8-period exponential. And three out of four of these signals work beautifully. So there's your 2/3 or better track record. Any discipline, when you're putting on options or swing trades, is better than trading on your emotions. So how do you find these? Well, we have a dashboard in Chaikin Analytics. This is a copy of a dashboard I created for a webinar on July 12th. And since we were bullish on the market, I was looking for bullish alerts in my list, which has about 150 names. And right at the top was Deckers, people who make Uggs, with a momentum breakout. We talked about momentum breakouts a minute ago, and you'll see why that's so important. So if you're looking for stocks to buy, you had Mylan, which has had a nice move. You had some of the home builders. But let's look at Decker. That big green arrow is where that momentum buy signal showed up on our dashboard alerts. And look what happened. Stock went sideways for 8 days, then reported better than expected earnings and spiked up to a new 6-month high. Went from 60 to 68 in 2 days. Then started pulling back a little as profit taking came in. But it was a great setup. Money flow was positive. Relative strength was positive. The power gauge at that point was positive, which is why you got that momentum breakout buy signal. Same thing had happened a few weeks before. Momentum breakout at the upper volatility band, pull back for 4 days. Stock resumes its uptrend. These are powerful signals, and we make it easy for you to find them on the stocks you're interested in. Now, I said we'd talk about playing good defense. We're just going to focus on this for a few slides because I want to get into the meat of this, which is earnings. Good defense is absolutely critical. In options trading, it means good risk management, good money management. It means cutting your losses. It means diversifying. But good defense can also lead to good offense. Someone once said it's the stocks you don't own that matter. It was Herb Greenberg, who used to write for TheStreet.com and CNBC. If you can eliminate a couple of bad stocks from your portfolio, from your trading every year, your results are going to go up exponentially. So here's a stock where you wanted to play good defense. Kinder Morgan. Bearish power gauge rating for over 1.5 years, from 43 all the way down to 12. Plenty of opportunities to buy puts with the ideal setup. Power gauge bearish, relative strength bearish, money flow negative, and an overbought sell signal. Wouldn't you have liked to have put on some of those trades? Imagine how profitable those put trades would have been. But how many of you would have had a difficult time buying a put on a stock like this, which was a big favorite after an 8-day rally? Let's be honest with ourselves. If you would have had a hard time buying that put position, type H into the question box. I would have until I developed this methodology. Chris, our senior tech person in-house, would have had a hard time. But now that he believes in this methodology, he's able to put on these trades, and you can too. So here's another example of an ideal defensive play. Cavium, semiconductor stock, made a bid for a storage company, totally off the wall with regards to their existing business. Been in a downtrend for over 1 year. When you get this relative strength sell signal, that's the one with the 4 to 8 week time horizon. It's a really simple setup. Relative strength to the market is red, not green. Stock rallies up, goes above its 21-day average, and drops below it. That triggers the sell signal. So it comes on some confirmation that the mini rally has reversed itself. These are all on our website, by the way, chaikinanalytics.com, fully disclosed, whether you're a subscriber, kicking the tires. The general rules are there for you. So these are ideal put setups, and they're a good way to play defense because you want to get these stocks out of your portfolio. Now, Joe Bicella, who organized this webinar, does onboarding sessions and one-on-ones with our clients, and he's teaching an options course, and remember that at the end of the webinar. And he had highlighted Cavium as a potential put buy, and we got this testimonial from Chris Lanham. Today I made my biggest profit, 150%, from buying put options on Cavium just a few days earlier. That was in mid-June. Now let's zero in on something that I think is so important, because not everybody has the courage and the conviction to do it. I call it the timing secret that produces huge returns. Find bullish or bearish stocks with Chaikin power gauge and relative strength. We've covered that. Use earnings season to supercharge your profits by knowing if a stock is likely to beat or disappoint, and then use Chaikin buy and sell signals for timing your options entry points. So earnings season and options are an ideal combination. Earnings season for most companies is January, April, July, and October. We're now just ending earnings season. It usually lasts for 6 weeks. These are companies that are on a calendar year, report quarterly. So why is earnings season so difficult for most investors? Because there's a lot of volatility during earnings season. There's a lot of speculation on CNBC and in the media about whether stocks are going to disappoint. But volatility creates opportunity. It's the Warren Buffett philosophy all over again. Be greedy when other people are fearful, and fearful when they're greedy. If you know if a stock is likely to meet estimates, beat them, or disappoint, then you've got an edge in earnings season. You can turn volatility to your advantage. That's the directional edge that the Chaikin power gauge rating gives you. Stocks with a bullish power gauge rating are twice as likely to report positive earnings surprises as stocks with a bearish power gauge rating. So let's look at the archetypal prototypical example. This is Netflix in October of 2014. Before they split 7 for 1, had that big rally. As you'll see in a minute, it's reverted back to a bearish picture in our work. But we actually put out a Twitter post saying buy put options on Netflix ahead of the earnings report because the power gauge was bearish. The stock was not making a new high. It had a history of negative earnings reports in October. Remember that when we head into October. And people who bought put options out of the money made 50 times in a day. Saner people like JV, who bought at or slightly out of the money options, gave us a testimonial like this. I've decided to add Chaikin Analytics to my resources. Using the upcoming earnings ideas in Chaikin Analytics, Netflix had a bearish rating, bought 3 put contracts for $22.20, sold them the day after earnings for $93.90, a quick $21,500 profit. Now here's Netflix today, almost 2 years later. Power gauge has been bearish off and on since last August. Netflix is a broken company in my view. Now, I can explain why I think that, but you don't need to take my word for it. The power gauge is bearish. Those 20 factors come out on the bearish side of the ledger, and it's been underperforming the market. So you want to use these sell signals to buy put options ahead of earnings. So you had a great opportunity back there in April, had a sell signal ahead of that earnings report. The stock dropped from 110 to 85, very profitable trade. And more recently, we had what I call the ideal setup. Power gauge is bearish, relative strength is negative, money flow is red, not green, and you get a sell signal. Now you had to weather about 3 days or 4 days of sideways to slightly higher action, but sure enough, disappointing earnings. Now why is Netflix broken in my view? They're losing subscribers in the US. They're creating very expensive original content like House of Cards, which most of us love, and they're trying to build their base overseas. Well, it's not working. Their business in the UK, which they hope would replace the US business, is not profitable. And the power gauge factors all of this in because the analysts know this. So you don't have to be an analyst. I don't have to be an analyst. I dive deeper because I make periodic recommendations. I made this my bearish stock of the week ahead of earnings. Here's a classic example of how you can use the power gauge rating and signals to find high probability setups for options trading. Now, instead of buying Netflix, if you were looking for a media stock, you might have zeroed in on Comcast. Bullish power gauge rating back there in early July, outperforming the market, positive money flow, earnings report due out in a couple of weeks, and the Olympics, which always creates a lot of interest in Comcast. So if you followed that Brexit buy signal, that actually was after Brexit, ideal setup to buy call options. You get rewarded with a positive earnings surprise and the stock spikes up to 68 and makes a new high. Or you might have been attracted to Sony because of the Pokemon craze. A lot of attention was focused on gaming companies, and you got an ideal option setup right there in July, just about a week and a half ago. Power gauge bullish, outperforming the market. Chaikin Money Flow is positive, and you get a money flow buy signal at a price of about $29.50. That spike up 4 days ago was a positive earnings surprise. The stock jumped 15%. Reported on July 29th, they earned 16 cents versus an estimate of a loss of 28 cents. So we've got an earnings alert, which is an exclamation point that's either red or green. This combination, all on one chart, is what makes Chaikin Analytics so special. Now, we've also added intraday bar, so I've taken a very timely example. Another media stock, AMC Networks. We have an intraday pop-up chart. So AMC reported before the opening today. You would have known that. Reports Thursday, August 4th. There's your sunburst. That means before the opening. It gapped down. We highlight that. When I pull this chart, it was down over 5% on the day. It's a stock that was already at a 52-week low. I thought about making this my bearish stock of the week on Sunday. Didn't do it. But sure enough, negative earnings surprise, negative money flow. The setup was back here when the stock rallied, but you made another new 52-week low. This is an example of it all coming together, the ideal setup, the fat pitch. Now, I'd like to go through one case study because I think it's so informative, and it shows you how Wall Street can confuse you instead of pointing you in the right direction. Back in March, PVH, which makes Calvin Klein jeans and Tommy Hilfiger and Maidenform bras and so forth, was due to report earnings. This is March 22nd. This screenshots from thestreet.com. PVH stock closed down ahead of tomorrow's earnings. It was down almost 2%. Wall Street is anticipating that earnings will decline and revenue will remain largely unchanged. The next slide shows you what Jim Cramer was saying. Not picking on Jim Cramer. He loves Chaikin Money Flow. Has been talking about it on Mad Money for over a year now. Former client of ours. Exercise caution with PVH ahead of earnings. So how could Chaikin have helped you pick up a 7% post-market move when PVH reported better than expected earnings? At a price of 93 on its way to 102. Well, the power gauge was bullish. So I have a big green arrow here, and you had had two positive earnings surprises in the previous 2 quarters. Strong Chaikin Money Flow. Bullish power gauge rating due to report earnings. Jim Cramer's telling you watch out. Chaikin is saying buy in. Now the next earnings report after that came after another decline in the stock. Positive earnings surprise, stock spiked up again and made a new 6-month high. And then on the Brexit pullback, yet another buying opportunity. Now why did PVH go down? Only 3% of their business is in the UK, but this stock dropped from 103 all the way down to 84. 20% of their business in Europe, people were panicking that Europe would do what? Go out of business? Stop buying handbags and jeans? Ridiculous. Conviction would have helped you buy this stock on weakness. There's another earnings report due out on August 24th. The likely it is another positive earnings surprise. Is it a guarantee? No. But the fact that the power gauge is bullish tells you the probabilities are for a positive earnings surprise. You've had 4 in a row. They come in bunches, and that's one of the 20 factors in our model. It's what contributes to the bullishness. So it's all there for you. Now we got this testimonial from someone who was new to Chaikin, 115% in one trade, 70% in another. I've been using Chaikin Analytics for several weeks. Already closed out 2 trades for gains like this. Tried different software packages and programs. This is by far the most straightforward analysis product I ever used. Can you see how straightforward this is? Transparent. Easy to understand. If you can, please give me a little love and type a Y in the question box. And I thank you for that. Now here's another example on the downside going back to February. Tableau, one of the cloud computing big data stocks, gave a reversal sell signal about 2 weeks before earnings. Disappointed. It had previously had a negative earnings surprise. How do we know that? Because the EPS icon is colored red instead of green, and the stock dropped 50% from 80 to 40, and it's gone nowhere since then with negative earnings surprises. But you get that big spike down, gives you the ability to take your profits on your put options. Now the poster child, and we've been harping on this stock because it's in the unfortunate position of having had 2 healthcare scares, the E. coli and then another one, is Chipotle. Power gauge rating actually turned bearish before the E. coli problem surfaced at a price of about 700, 690. Then the stock started underperforming the market. And look what happened. Just market agrees with the model, you get price acceleration to the downside. Along the way, we got overbought sell signals, which were trading signals that work. But back here in April, we actually, on a webinar and in our market insights, made this our bearish stock of the week. I felt this was an ideal option setup. The stock was above 450 and due to report earnings. And then we had another ideal setup here just 2 weeks ago, and I'd like to show you what happened in both those instances. In the first one, we used the options play module on April 15th to recommend a bearish vertical put spread, buying the 470 put, selling the 400 with the stock at 466. Total cost of that was $2,180. Profit potential was better than 200%, $4,800. So for $2,100, you could control $46,000 worth of the stock without being short. Now that worked out beautifully because Chipotle dropped below 400 in that time framework. Now the options idea that we recommended in our market insights on July 17th did not work out as well. Same idea, bearish put spread ahead of earnings. In this case, you were only paying $1,370. Options play gave it a 135 rating, circled it in green, basically said this is the highest probability strategy if you're bearish on Chipotle, and we said put on that put spread. You've got 2 weeks to go. Earnings are due out on the 21st. Likelihood is a negative earnings surprise. So what happened? Negative earnings surprise. Terrible year-over-year sales. The stock rallied over 10%. Wall Street can frustrate you at times. So people who put on that spread with a July 29th expiration basically lost all their money because the stock didn't drop below 410 by July 29th. But it was a heck of a lot better than being short 100 shares of stock at 405 and worrying about a margin call and where the stock was going to top out. Well, we follow up our recommendations. So I tweeted on July 21st, I said, CMG earnings disappoint, but stock higher. Hang into bearish positions. Same-store sales are down 26.5% year over year, which is a seriously bad number. You can't survive in the restaurant business if your business is down 20%. So what happened to the stock? Well, we saw that. It's trading under 400 today. So whoever bought that stock all the way up to 440, 444 was the high, short covering, I don't know. Some brokerage firm recommended it. They're puffing smoke. This stock's going to make new lows below 370. That's what we said. That's what we believe. So we told people, put on a new options position here. Give yourself a little more time, and that has worked out. Now, you can find the stocks that are due to report earnings with our screener. So right before the webinar, I did a screen of the Russell 3000 looking for bullish stocks where the earnings surprise factor was strong and they were due to report earnings today. And I narrowed that 3,000 stock universe down to 12 stocks, and one of them was Priceline. Now, the interesting thing about Priceline is it's had a choppy price action for the last 6 months, but the power gauge is bullish. The last earnings report was a positive earnings surprise. But the options were extremely expensive. So I didn't even put the chart in here, but I noted that we were going to look at Priceline because they reported earnings after the close, after this webinar began. And sure enough, Priceline reported a positive earnings surprise, and it's trading at 1432, up 72 points in the aftermarket trading. It's up over 5%. Now, because the options were so expensive, because the implied volatility was so high, there just wasn't a high probability options trade. But very often there is, and this is an example of how you find those trades. The screener puts you in control, cuts through all the clutter, takes the time and the hard work out of zeroing in on the best opportunities. And we got another testimonial, 400% return in 2 weeks after using Chaikin Analytics. And these were stocks that I hadn't even talked about. AMD, call spread, Google put spread. Torsten found these on his own using our screener and our options tool. So now we've covered the 5 keys to supercharged options trades. And you can use Chaikin Analytics to implement this discipline methodology. It comes with options play, our screener, our earnings alerts, and now our intraday charts. One final testimonial on the Chaikin Analytics platform. I'm writing to tell you how incredible analytics has become. It started great, but with options and screener additions, I feel it's absolutely the best on the market. So how can you start taking advantage of Chaikin Analytics now? Because now is so critical in our lives. We can always put off a decision, but to step up and do something that's good for our financial future and financial well-being is really priceless. So Chaikin Analytics normally sells for $1,950 a year. As a webinar special to Price Headley's community, taking $300 off the typical price, reducing it to $1,650, and this offer expires Sunday, August 7th. Now, along with everything we've been looking at, you get something that really is priceless. Small group tutorials to help you learn how to set up the system and use it to its fullest advantage. Joe Bacella does group tutorials 3 days a week. I think there's probably one tomorrow morning. And that's really important, because if you get a tool like this, you want to know how to use it. That's why so many testimonials speak to how much success people have had in just 2 weeks of using the system. You also get my colleague John Schlitz's Morning Insights, comes in your inbox. before the opening, so you don't have to stay glued to CNBC to find out what's happening pre-market or what happened overseas. And you get my weekly Market Insights newsletter, where I've been fortunate enough, based on 45 years of doing this, to be on the right side of the market most of the time for the 3.5 years we've been writing this. But here's another reason to read Market Insights. It keeps you from getting tossed and turned by the headlines. So in my Market Insights before the Fed announcement in June about a potential rate hike, my headline was, "Ignore the Sturm and Drang surrounding the May employment report." That was on June 5th. 2 days later, Janet Yellen said, "Don't overreact to the jobs report." Same message. I don't think she reads Market Insights. But we're giving you the benefit of 45 years of writing market newsletters, of analyzing markets methodically and unemotionally. It's priceless. So one final testimonial, 10x return in 5 days. In the 5 business days I've been using Chaikin Analytics, I paid for the subscription over tenfold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And team is really the key word here. I started Chaikin Analytics with my wife Sandy almost 7 years ago. We're now 27 people dedicated to your success. There's an entire team. We call it our success team, headed by Joe Bacella and Michelle, to help you get the maximum benefit out of Chaikin Analytics. So as one final inducement to get you to subscribe to Chaikin Analytics, we've got a special bonus. If you subscribe by midnight tonight, not only will you get the $1,650 price, but as a special bonus, we'll enroll you in our Chaikin Options Academy course. It's a live 2-day course, 4 hours of training to enhance your knowledge of the options market. It's a great complement to what price does. We go into some other strategies, show you how to use all these tools that we've been talking about. So you can go to chaikinanalytics.com/trends, subscribe by midnight. Not only will you get the $300 discount, pre-populated, you can do it right now, but we enable you to enroll in our Options Academy course whenever it's convenient. Joe runs them periodically. We can go to sales@chaikinanalytics.com or call the number that's on the screen. So I'd like to thank you all for staying with us. I noticed that we got very few people dropping off, which I hope means that we had something to offer you. And a special thanks to Price Headley for giving us the opportunity to present what we think is a world-beating methodology that's based on fundamentals and technicals to his community.
Mark, if I can jump in here, this is Price. Great presentation. It's folks. I just want to say, I've picked up so much through Mark, and I always do, in learning about his indicators, his methodology, and the word that I wrote down, because I always think it's important to kind of boil things down with so much great data, is the word I wrote down is conviction. When you're making a trade, you have to ask yourself, do you have the kind of conviction as to why you're making the trade, and are you willing to stay with that trade more than just a moment if you get one adverse tick against you? I thought Mark's example, for example, with Netflix, and how he even tweeted it out to say, hey, it got a short-term bounce, but he said his model was very convinced that things were headed lower. He even put on another bearish position and benefited from that pop back down from 440 to 400. So conviction, it comes from having the right tool set and obviously a lot of experience. When you're talking about 50 years of experience from a market legend, that you're getting the benefit of Mark's expertise and what he's put into this the scanning tools, of course, all the multi-factor model, fundamental, technical. I'm kind of blown away, Mark, at just how comprehensive what your offering is, and I think it's really important, folks, you make sure you take advantage of it, not just to save the several $100s that Marc's giving you to our Big Trends community here today, but also to take advantage of this special live options training over a couple of days, 4 hours training to really reinforce what you're learning by using the Chaikin software over the next year. So really, really powerful stuff, Marc. I want to thank you for sharing so much and really of your knowledge, and of course talking about live things that are happening in this earnings season, how you can take advantage of not just the earnings that are happening, but Marc alluded to it too. I've always said it, that it's not just what the earnings are, but the nature of the surprise, and it's a surprise as a legitimate one. You can really get some continuing trends. That's where I think a lot of the big trends philosophy really dovetails really nicely with the Chaikin Analytics philosophy. So I'm really excited to fully endorse what Marc is sharing here and said definitely add this to your tool set to enhance your conviction that much further, with so many of those factors being covered throughout that entire comprehensive model. So thank you again, Marc. Fantastic job, and I look forward to staying in touch with you and seeing what else we can do together in the very near term, because I love what you're doing for traders.
Well, Price, thank you very much. I'm really thrilled that we have this partnership going. And for those in the Chaikin community who are on the webinar today, and I know there are a lot of you, Price presented last week a really powerful set of income strategies, and I encourage you to go to his website, Big Trends, to see what he's doing. So for those of you who are part of the Price Headley community, you already know that, but I know there are a lot of Chaikin subscribers on the webinar this evening, and I encourage you to go to Price's website. So with that, again, thanks to Price for this opportunity. We're going to turn it back to Joe Bicella, who will wrap up the webinar and tell you once again how you can subscribe, and also how the video will be made available.
Beautiful. All right, everyone. So again, thank you very much, Marc. Thank you, Price, also for your time. We're seeing a lot of great feedback here from the webinar. So thank you all very much for sticking around. As Marc mentioned, we would love to have you join us. We have one more subscriber-only session that we're going to be hosting this week. It is our onboard session, which is perfect for anybody who is trying to learn the ropes about Chaikin Analytics. But again, make sure to take advantage of Marc Chaikin's offer here, $1,650 for 1 full year to Chaikin Analytics. It's just a one-time payment. I saw there was a lot of questions about that. But again, it'll be for a full year to Chaikin Analytics. Plus, I'll have the honor of being able to host you with my Options Academy course. We spoke a lot about finding the right stocks to trade options on, finding the right earnings plays to trade options on. Well, we're going to cover all of the details from soup to nuts for how to set up your trade, how to monitor it once you open it, and of course, how to identify the right point to exit it. So a lot of very important decision making that goes on during that course, and it is well worth your time. And of course, that session will be recorded. Our next session will actually be taking place on August 24th, so a couple of weeks from now. We'd love to have you join us. So again, you can take advantage of Marc's offer here. You can simply give us a call at 877-697-6783. Actually, just chatted out a link where you can access more information about this. But again, if you wanted to type that in yourselves, just simply go to chaikinanalytics.com/trends. So I know there's a lot more questions coming through, but unfortunately, we do need to wrap up the webinar. If you have any questions, again, give us a call at that number. We have a whole sales team standing by right now to answer questions. And again, we'll be here all night, so feel free to dial as soon as you can. So with that said, on behalf of myself, for Marc, Price, and Michelle Greenblatt here, who's been diligently answering questions here, we want to thank you all for spending your time with us this afternoon. Look out for the recording tomorrow morning. The session has been recorded, so we're going to email this out to you tomorrow morning. In the meantime, have a wonderful evening, and we will see you tomorrow.